Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range, and on Friday, the market closed with the buy side in control. Heading into the open, we have initial support at 20.5 to 23, and if the buyers are going to continue to be dominant, then ideally we want to see the market holding above 20.5 to 23. Holding above that area serves as a bullish confirmation, and from there we can head back up towards 27 quarter, 29 quarter, which marks the overnight high, the open gap at 28, and the naked VPOC at 29 quarter. And beyond that, the next area of significant resistance is going to be 35 to 37. So if off the open today, we're seeing underlying strength via a strengthening advanced decline line, if we're seeing upward momentum via the tick holding above zero, then eventually the market could make its way up into 35 to 37. Now we don't know how long it's going to take to get up there, but right now, as long as buyers can hold ES above 20.5 to 23, maintaining that bullish pattern, eventually the upside objective would be 35 to 37, and then it's only going to be a matter of whether there is sufficient upside momentum and volume to push the market up there on the day time frame today. So how the market responds to 20.5 to 23 is going to be important. Below that, we have 17 quarter to 18 quarter, which marks the intraday breakout area from Friday. And that's another spot where buyers can defend. And even if we poke below initial support, as long as we can hold 17 quarter to 18 quarter and then get back above 20.5 to 23, the buy side could still push the market higher. But if we fail at 20.5 to 23 and we fail at 17 quarter to 18 quarter, then that would be a red flag, because at that point in time we will have dropped below initial support, and even the intraday breakout from Friday would have failed. And from there we can go down into the 11 to 13 support. Now given that we have a high volume node there, and it also marks the RTH low from Friday, if the market's exhausted into 11 to 13, that's still going to be an area where responsive buyers can step in for at least a short-term bounce, and then whether that develops into something bigger is something that we will have to assess in real time. So right now, heading into the open, again, our short-term bias is neutral bullish, and we are going to give more edge to the buyers as long as the market is holding above 20.5 to 23, or worst case scenario, 17 quarter to 18 quarter. If those zones don't hold, then the bias is no longer going to be neutral bullish. It'll flip to neutral, where the market could then head down into 11 to 13, and then perhaps start balancing. And if we're seeing a lot of weakness on the day time frame, then perhaps we go lower into 08 quarter, 08 half. But on first test, the 11 to 13 area would be a spot where buyers can be active. And then on the upside, if we're holding above 20.5 to 23, the immediate resistance is going to be 27 quarter, 29 quarter. It's not very strong resistance. So as long as we're seeing a strengthening AD line and upside momentum, we can take that zone out and then head up into 32 quarter and 35 to 37. So those are the main ideas heading into the open. Let's see if the buyers can continue the upward trend that we saw on Friday and whether they can hold it above 20.5 to 23, and we'll take it from there.